Good morning, traders. It is Monday, Columbus Day, October 13, 2014, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. Not seeing much over the weekend. We had Draghi speaking, among others, but nothing really worth mentioning. Reminder that today is Columbus Day. It's a bank holiday. The U.S. Treasury and FX pits are closed. Bond markets closed. The rest of the markets open and trading as usual, including equities. The IMF steering committee says increased downside risk to global recovery, priorities to raise growth. Saudi has signaled that the country is comfortable with lower oil prices for an extended period of time. This move is seen as a strategic move by the Saudis to take a shot at other countries producing oil, including U.S. shale, the U.S. shale business, essentially signaling that they're not interested in OPEC meetings to stabilize prices, and that they're comfortable letting them drop. Materials and industrials led the way higher this morning. Gold has hit 4-week highs at 1237.80. Looking ahead at the schedule, there are no economic releases today. At 11 a.m. Central, we have ECB's Weidemann. And then at 11:30, we have Fed's Evans. It's interesting, this morning I read this article. Let me see where it is. I read an article about the fact that Weidemann and, or as they call him, Weidemann, and Draghi do not see eye to eye and find it difficult to work with each other. So it's interesting. Weidemann is a staunch hawk on the economy. Let's look at the action from last week. Last week's pretty intense. There we go. So the ES had the largest two-day loss since 2013, since fall of 2013, on Friday and Thursday. The ES ended up closing on the low on what is the highest delta that I can see going back as far as I have delta. You can see here delta actually hit, closed also on the low at about negative 90,000 contracts on the day. That's pretty intense. If you look at this delta chart, let's fix this. You could see that nothing comes close to that. The closest we have is 72,000 here, which was that drop in July. And then I don't retain delta information beyond that, but pretty intense selling here on Friday. Overall, the ES again played out our primary hypothesis. The expectation was for a retest upwards, and then for the market to make a lower low at some point in the session. It did that. It pushed to 31.25, rotated down, pushed to 1906.50. If you recall, we have 1909 as a key low volume node in this area, and it bounced right back up to 1975 for a retrace to 950 for a higher low, and then it ended up rotating all the way back up, which was kind of interesting. It looked like it was done on the downside until the afternoon. Then it went into balance. You can see here crisscrossing the mid before selling off into the close. Markets just panicky a little bit. This morning, the ES opened below closed as expected with the way the configuration on Friday. I believe that we would have a continuation move. This is an impulsive move down low on a neutral, on a closing on the low. It's not neutral extreme, it just shows it here. Yeah, I didn't note down neutral extreme. It's closing on the low. Is for a continuation lower. What it ended up doing is it ended up pushing to 18. The next levels I had down were the next key level was a gap zone between 86.50 and 84. That comes to us from May 25th, I think. Let me see, 26th, and then the next area down is 81.25, which is a naked point of control. The market pushed to 80.50 and bounced pretty good on the European Open. As you can see here, the European Open, which gapped down, has had a strong rally from the Open. It's overall the European market's fairly unchanged right now, to slightly up. So the market's found some buying on the European session. Metals, like I said, metals have been leading the move up. The US dollar has fallen during the overnight session, which is supportive of US stocks. The US dollar closed here at 86.02 and has gapped down and is holding in this Thursday range. So the expectation for today really is for the market to, with the bond markets closed, the expectation is for this low to hold, although I think we're likely to make a lower low here. But today being with the bond markets closed, and I believe it's a holiday in Japan as well as Canada maybe, the market's expected to just sit here. I'm looking for a break of the overnight high 1903 for a pushback towards 1909.25. I expect that 1909.25 will give us pretty decent resistance on the first push, and then ultimately, if buyers are really in play here, 1915 is a key target up. That's the primary idea. I expect chop on the open here, by the way, between 1903 and the low. I expect us to chop around for a while, but I expect it to resolve at some point for a test of 1909.25 and 1915. I don't expect further precipitous selling today. I expect today to be a rest day. So that's the key idea. If we end up pushing higher, then finding more sellers stepping in, and we make a strong move through 93.25, then I expect it to again retest at 81.75, 81.25, and potentially push down to 18.75. And that gives us about 15 points of range. If it pushes up, it'll give us about the range we would expect for today, which is about 22, 23 points. So I'd expect it down here, but that's the second hypothesis. I expect that the better play, the higher probability play, will be upwards, recovering on the upside. This low here it did close on the low. This low is technically weak. The expectation here is that this low will be taken out, if not today, then tomorrow. But we'll see how that plays out. That's all I have for you. Just remember that today is not a full, even though the market's open, you're not going to see full participation. It's important to understand that days like today create surprise moves, and not to be stubborn. Last week, I watched a lot of people just stubbornly fight the market, and some of them are still holding long positions from way, way, way up there, staking a large percentage of their account on a trade that clearly isn't working. So to me, I question the logic, which I understand the emotion behind doing such a thing. But I question the logic of having to sit through and hope and stress out, and maybe not even sleep over a trade that has gone poorly, and waiting for the market to come all the way back. I further question the idea, the habit that's being created, and that's the most important thing for traders, is the creation of habit. That's what you learn at boot camp. When you go to the military, their goal is to instill habits that later you'll rely on when you're in action. I question the habit of holding on to a loss that later turns into the market turns, and it turns into a small win. To me, that's probably one of the worst things you can do to yourself as far as developing as a trader, because if today you took 30 points of heat or 40 points of heat, and it comes back and it gives you a point of gain, and you're thankful, you're on your knees and thankful that you got that, what happens next time when it gets beyond 30, 40 points? What if it's 60 points? You hold it then? What kind of things are you reinforcing as a trader? And I think you really need to think about that if you're doing those sorts of things. You want to trade well. You want to trade in a disciplined way. You want to be almost mechanical about taking your losses. And you want to create the opportunity to catch the other side if you're wrong, as opposed to holding on to a trade that needs to come all the way back. You could have cut it sooner and ridden the rally that you anticipated in the first place, and made your money back plus some, maybe, rather than sitting through and hoping for a recovery. I really implore you to, if you don't want to define, or feel like you cannot define the risk per trade, then please define the risk for the day at least. Just stop when you hit your limits for the day. This is not academic. It's not theory. This is practical. This is what professionals do. This is what I did in my prop shop. Everybody had a daily loss limit, including myself. And so if you don't respect those things, you're just a gambler. You're just a gambler, and you're wasting an opportunity to do something with this as a career. And hopefully that is your aspiration. And this requires a lot of commitment on your part. It requires you to exercise a lot of control on yourself. And so if there are areas in your life where you've gotten away with bending rules and not following rules and so on and so forth, you're going to pay for that here in trading, because it's just not forgiving. The numbers do not lie. I know I'm preaching, but I really want to impress upon you, if volatility increases like this, instead of participating in this and making something out of it, you're going to find yourself backtracking and just trying to survive, because your habits are those that support poor behavior. Good luck today, and I'll catch you tomorrow. Take care.